Gold, of course, continues to move higher, trading at roughly $2,050 per ounce after breaking above the $2,000 threshold last week. There's a live look at the price of gold. Phillip Streible joins us now. He's Chief Market Strategist at Blue Line Futures. He's going to talk to us about gold and other commodities as well. Phillip, it's always great to have you here with your expertise in the world of commodities with us. Let's begin with gold. I think a lot of investors around the world are wondering, is the rally going to top out where gold is right now, or is there more to come in the price of gold?
No, I think that gold looks like it's going to continue to move upwards. I mean, the support levels are constantly rising right now. The U.S. dollar had its first up week in seven weeks last week, and it looks like it's going to continue its downtrend. You know, there's a lot of talk about an additional relief package and negotiations over that with the Democrats and the Republicans here into the early part of the week. It looks like Donald Trump had passed another stimulus measure here with people's checks, providing them with another $400 worth of assistance. So the U.S. dollar is just continuing to weaken, and inflation is starting to pick up, and real interest rates are declining. As long as those three things happen in motion, gold futures should continue to rise.
Do you have a target or a range as to where you think gold is going?
I mean, the current trajectory, and then the way that people are stacking their orders in, it seems like every correction is being just bought up, that it looks like, I mean, we should be able to hit, you know, the 21, 23, 2,500 target over a systematic range going out to the end of the year. That's just the way that the rate of change is on gold moving upwards. The daily fluctuations in, you know, gold is about $50, and the way that it's having very few down days and several straight up days, that rate of change should continue to propel it forward to, like I said, about 2,500 by the end of the year.
A lot of several Canadian gold producers have reported results over the past couple of weeks. Today, early this morning, it was Barrick Gold. And as you would expect, profitability is soaring for these companies, even if their all-in sustaining costs are rising. The realized gold price gains are so huge that profit is multiples of what it was a year ago. What is your view of the gold equities? Are they underpriced relative to the metal, or are they fully valued?
Some of them are still undervalued, and I think that you know, gold equities like GDX, GDXJ, those baskets, and then a lot of the individuals, especially that have good resources already, are in good cash positions, don't have heavy debt, and you know, have a lot of that, you know, mining and gold and silver already on hand. You know, they're going to do quite well. We're seeing some of them raise their dividends. We're seeing the prices are constantly moving up. You know, the only issue is the social distancing is reducing mining output, but we're seeing the price of gold and silver rising so fast that it's offsetting any of those losses that they would take.
Okay, let's move to the world of oil. We're seeing some real strength in West Texas Intermediate crude as well. We showed our viewers the Canadian energy stock. Shares of Canadian energy producers are moving sharply higher as well today. What's your take on the price of crude oil? Is 41 or 42 it, or can it push higher?
Man, I was quite bearish on oil when we started to break down into the back end of the 30s. I thought we would have gone, you know, $38 to $35, but it looks like they're bidding it up quite a bit. And it's really, it kind of bucks the fundamentals because of the fact that OPEC said they were going to increase production. You look at social distancing measures. A lot of the states are rolling back some of their, you know, the phases that they were in. You look at, there's actually like checkpoints set up from where people have been going in certain states. And a lot of cities are continuing, or states are continuing to add other states around the United States where if you travel to, you come back, you need to go into a 14-day self-quarantine. So I thought that maybe gasoline demand would go down, oil demand would go down. But if you look at the inflation side of things, you know, historically, they actually say, and I got to look at some of the facts and the data on it, that they say that oil has been a better gauge of inflation than gold has. So, you know, if all of a sudden oil starts to break out to the upside due to rising inflation and maybe not so much as supply-demand fundamentals, you could see that movement or that next undervalued commodity. I mean, if gold's already gone, silver's starting to go, and you start to look around, and platinum, palladium already made a move. Maybe oil is one that people start to pour into.
Okay, last question. Aside from gold, aside from oil, what other commodities are on your radar screen this week, and why?
Oh, we've been, at Blue Line, we've been quite bearish on the grain complex because of the fact that, soybeans and corn, they've had ideal weather conditions. They've been year over year. The exports have been lower. One or two one-offs with China with large purchases, but with a renewed geopolitical tensions between U.S. and China, we don't think demand's there. We think there'll be bumper crops. So any rallies that we've seen on soybeans or corn, we've been fading those and selling them off.
Phillip Streible, thanks as always for your expertise. He's Chief Market Strategist at Blue Line Futures. He joined us from Chicago. Phillip Streible.